Well, Donald Trump said that under Biden, we had the worst economy in the history of the country, yet we set multiple record highs in the stock market under Biden. So, the stock market means nothing, right? The stock market can go up even though the economy is lousy. And that's actually what's happening. The stock market is just a bunch of speculation. But the real markets are the foreign exchange markets, right? And the dollar keeps going down. The dollar is very close to the lows that it hit when it was collapsing following, liberation. The chairman of the Federal Reserve, the secretary of the Treasury, right? Those guys were all in favor of getting off the gold standard. And they actually said that gold was weighing the dollar down. And if we freed the dollar from gold, the dollar would gain value and gold would go down from $35 an ounce. My father said the opposite, that gold would go up if we left the gold standard. And of course, it went from 35 to 850 in 1980. So just as they are today, the Secretary of the Treasury and the Federal Reserve.
The early part of the 21st century was gold's time to shine. From 2004 through 2024, gold generated an annualized return of 8.4%. Adjusted for inflation, that comes to 5.6% annualized. As of mid-2025, the US dollar is undergoing significant devaluation, with the dollar index falling 10.8% in the first half of the year due to fragile economic signals and global shifts. PeterSchiff underscores that the current bull market is just getting started. As the dollar continues to weaken, signs of stagflation are evident. For Schiff, this isn't a theory. It's the perfect setup for gold to rise significantly higher. Since the US decoupled from the gold standard in 1971, the dollar has suffered a near-total collapse in purchasing power, while gold has increased by over 8,000%. PeterSchiff argues that this isn't a coincidence. It's the precise collapse his father, Irwin Schiff, predicted. In his outlook, Peter criticizes Trump for painting a picture of a booming economy, when, in reality, deficits are exploding. Peter highlights how tariffs, a falling dollar, and higher costs are pushing inflation higher. He warns that the bond market is showing real stress, with yields nearing 5%, as serious money exits treasuries and the dollar. When the President of the United States and the U.S. Treasury Secretary are both calling for rate cuts measured in the hundreds of basis points, at a time when the government has just posted a near $300 billion monthly deficit, unemployment sites at 4.2% and inflation remains well above target, it's hard to ignore hard assets with scarcity value such as gold. Gold is coiling within a defined symmetrical triangle, and traders should be alert for a potentially explosive bullish break if highly expansionary fiscal policy collides with extremely loose monetary settings. Ultimately, Peter argues that investors are shifting into gold, gold stocks, and foreign markets, seeing them as safer bets than U.S. assets. Before we dive into Peter Schiff's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market.
Now, of course, if you want to go back to 1971, the national debt was tiny. It's like, it wasn't even it didn't even get to $1 trillion until 1980. So I don't remember what it was back then. Maybe it was a couple $100 billion, right? And now it's, 37.5 trillion. But gold, since Nixon took us off the gold standard, and when he did that, gold was $42.22 an ounce after two devaluations from 35. Gold is up 8,000% since then. 8,000%. Now, it's really not gold going up, right? Because gold's the same, right? Gold, an ounce of gold hasn't changed. It's exactly the same as it was 54 years ago. A lot of other things have changed. A lot of other things have improved. Some things have gotten worse, depending on, what you're looking at. But gold hasn't changed. It never changes. It's eternal. It's exactly the same. What's happened is the dollar's value has collapsed, and it's lost almost all of its 1971 purchasing power. It retains a fraction of it, right? But it's lost most of it. And, if you go back to 1971, prior to that, 1968, they had hearings on taking the U.S. off the gold standard, removing the gold backing. And my father, Irwin Schiff, is one of the few people that testified against it. the chairman of the Federal Reserve, the secretary of the Treasury, right? Those guys were all in favor of getting off the gold standard. And they actually said that gold was weighing the dollar down. And if we freed the dollar from gold, the dollar would gain value and gold would go down from $35 an ounce. My father said the opposite, that gold would go up if we left the gold standard. And of course, it went from 35 to 850 in 1980. So just as they are today, the Secretary of the Treasury and the Federal Reserve were completely wrong. And I'm right? I'm carrying on my father's tradition about being right. Because, when I made that video 4 years ago, I said buy gold. I mean, it was actually a promotion for Schiff Gold. The video ends with buy gold now. And if you bought gold then 4 years ago, you're up 85% just since then. But, I don't think this bull market is over. Again, we've got a long, long way to go because the dollar has a long way to fall. I think this trend is going to go hyperbolic. I think when we go back to QE the next time and the Fed starts cutting rates, the economic data that's been coming out, technically the market sentiment looks good, but the economic fundamentals of stagflation are very strong for gold, right? Because we got last week, we got the disappointing jobs data, which was so bad. Not only did we miss estimates, but they revised down the prior 2 months by the most in 50 years. We barely create any jobs. And if you remember, if you're a regular listener of my podcast, not the Friday market wrap, which, again, I'm going to keep doing this market wrap, but I also do my podcasts. And on the Fridays where the May and June jobs numbers came out, I specifically said, these numbers are going to be revised down because everybody was celebrating that the numbers came out better than expected. And I said, this is BS. They're not going to end up being better than expected. They're going to get revised down to weaker than expected. And I was 100% right. That's exactly what happened. In fact, the revisions were even bigger than what I was expecting. But these numbers may not even be right. They may revise them down again, although who knows, because Donald Trump got so mad that the numbers were so bad that he fired the head of the Bureau of Labor Statistics. He claimed the numbers were rigged to make him look bad. And now he's got a new guy, I think, but they may not even report the job numbers anymore for a while, right? Until they get it right. So maybe they need to fix it because I think Trump may be trying to hide the bad news from the public. See, Trump keeps talking about how the economy is booming. We have the hottest economy in the world. We don't. There is no economic boom. It's just a fantasy that Trump is trying to sell as reality. If you look at the budget deficit for July, the month of July, it increased by 20% over last July. It's the second biggest July deficit in the history of the country. The only July where we ran a bigger deficit was 2021 when we had all the COVID stimulus. Well, we don't even have that anymore. And we got the benefit of all the tariff revenue. Yet even with the tariffs, we still had the second biggest July deficit ever. Now, if we had a booming economy, we wouldn't have booming deficits. Booming economies reduce the deficits, right? Because the government doesn't have to spend as much on unemployment or welfare, and people are earning more money. They're paying more taxes. There's more jobs. There's more profits. And so the government is in better shape. The fact that the deficits are exploding is more proof that the economy is not. In fact, if you look at a lot of other economic data, the signs of stagflation are everywhere. In fact, this week, yesterday, we got the producer price index for July spiked up 0.9, way more than expected. Year over year number, much bigger than expected. I've been saying for a while, inflation has bottomed and is headed much higher. And now we're starting to see it in the data. Of course, we're going to see bigger and bigger prints in the months ahead as a lot of the tariffs really start to get factored in to these prices. And of course, businesses are going to end up raising prices by more than the tariffs. I mean, not only are they not going to absorb the tariffs, not only the consumer is going to pay more because as the prices go up, sales volumes go down. And so now businesses are forced to generate profits on lower sales. So how do they do that? Well, they need to increase their margins. So they have even higher prices, and they try to make a profit with a smaller group of customers. But it's not just the tariffs and the need to, increase margins that are going to cause prices to go up. The dollar is very weak and is going to get a lot weaker. In fact, the dollar fell again this week. And even though we got a big bounce in the stock market, again, we had new highs this week, record highs, NASDAQ, S&P 500, right? That's all a bunch of speculation. Those markets really don't tell you anything about the economy. Donald Trump and the Trump administration, they're still trying to claim that we have a great economy, and they're pointing to the stock market as an indicator. You see record high stock prices. This proves we have a great economy. Well, Donald Trump said that under Biden, we had the worst economy in the history of the country, yet we set multiple record highs in the stock market under Biden. So, the stock market means nothing, right? The stock market can go up even though the economy is lousy. And that's actually what's happening. The stock market is just a bunch of speculation. But the real markets are the foreign exchange markets, right? And the dollar keeps going down. The dollar is very close to the lows that it hit when it was collapsing following, Liberation Day. So you got a problem with the dollar. The weak dollar is going to put upward pressure on prices because, the dollar's going down. So we need more dollars to buy our imports. That's on top of the tariffs. But look at the bond market. The bond market was down on the week, meaning yields went up. The 30-year U.S. Treasury closed the week at 4.93. We are almost back at 5%. We are not far off the lows. The reason that Donald Trump initially called off the phony reciprocal tariffs was because he said the bond market was yippy. Well, it's still pretty yippy because it's about where it was back then. There hasn't been a recovery, and that's because there's real money in the bond market, right? Nobody is buying treasury bonds for, to speculate and get rich, right? It's not a meme stock. This is serious money that is selling U.S. treasuries. So the real money is getting out of dollars, getting out of treasuries, and getting into gold stocks, buying foreign stocks.
From a technical perspective, PeterSchiff sees the setup for an explosive new rally in gold. The key signal shows that mining stocks are finally leading. For years, gold hit new highs without confirmation from the miners, but now indexes like GDX and GDXJ are up over 65% this year. This shift means sophisticated money is moving in and betting on a long-term bull market that's just getting started. PeterSchiff made a bold call earlier this year to buy gold miners instead of physical gold, since you're essentially buying gold still in the ground at a discount. So far, that call has been right. Since his report, gold is up just 1%, while miners have surged over 20%. Newmont Corporation, the world's largest gold mining company, has continued to thrive in the gold market, driven by record-high gold prices and comprehensive corporate reforms. The company's stock has surged by 85% this year, making it one of the strongest performers in the industry. Investors are flocking to the gold market, viewing it as a hedge against economic uncertainty. While gold aims for $4,000, PeterSchiff says the real fireworks will be in silver. He sees silver as the bigger upside and the prime entry point now, predicting a breakout toward $100. Let's get back to the interview.
From a technical perspective, I think the markets are set up for another explosive rally. And what really makes me optimistic now is the action that I am witnessing in the mining stocks. Because one of the problems with this rally for many, many years has been the failure of the mining stocks to confirm the continuous breakouts to new highs in gold and silver. And a lot of people who might have got into the market were discouraged by the lack of confirmation from the gold stocks because people think that gold stock investors, are sophisticated and forward-looking. Because when you're buying stock in a gold company, you're buying into an earnings stream. And so what's more important than the price of gold today is the price of gold tomorrow or, years from tomorrow. Because investors are looking into the future and they're discounting all that income into the present. And the problem was, as investors, particularly on Wall Street, watched the gold market rise. They really didn't understand why it was going up. And they just expected that, well, it's going to go down, that this is just a short-term thing. They found all sorts of reasons to attribute as to why the price of gold was going up. And so they just assumed that it was going to go down. And so they didn't want to buy gold stocks, because if you think the price of gold is going to go down in the future, well, that means the mining company profits are going to go down, especially with costs going up. It gets more expensive to mine gold every year. So if the price of gold doesn't go up, it's hard to maintain your earnings. And if the price of gold goes down in the face of rising costs, that's a double whammy. And so the investors were staying away from gold stocks because they were very suspicious of the rally. Well, looking at the action this week, and even in recent weeks, I'm starting to see investors gaining some confidence in this bull market, because I'm seeing days now where the price of gold is down quite a bit and these gold stocks are up. They used to get killed. I mean, every time gold went down, they got destroyed. And then gold would make a new high, but the stocks wouldn't make a new high because they got beat up so much on a small dip. But now, instead of being dragged up by the metal, gold stocks are starting to lead, with both the GDX and the GDXJ making 52-week highs on the week. In fact, the GDXJ, which made a new high after the GDX, made a new high this week and made a new high today on Friday. And both of those indexes are now up 65% on the year. That is a big move. Gold itself is only up about 25%. So finally, after years of lagging, they're now starting to outperform. And this is a bullish sign, because now we've got confidence in this bull market. Now, some people might say, well, isn't that a contrarian indicator now that people are buying these stocks? Not really, because this is sophisticated money. The public is not involved. And it's not like this is a mania, a blowout stage where you go to the supermarket and the cashiers are talking about the penny gold stock that they just bought. The public is not involved in this market. This is more sophisticated money finally moving in. And the way I noticed that is a lot of these gold stocks, when they report their earnings, recently, every time they reported earnings, even if they beat numbers, they killed the stocks. And if they missed numbers, they destroyed the stocks. Well, a lot of companies have come out with earnings over the last couple of weeks. Some of them beat, some of them have missed, but even the misses were great earnings because, compared to what they earned the prior year. But what I've noticed is every time these stocks get sold off, almost reflexively on these earnings, they bounce right back. It might not be the same day, maybe the next day, next 2 days, but they recover everything and move higher. So you have big money now that is buying the dips in these stocks. And this is just the beginning of a huge wave. In fact, that's why, if you remember back in April, I kind of angered some of my reps, my precious metals specialists over at Schiff Gold, because I put out a special report from Europe Pacific Asset Management, and it was called The Best Way to Buy Gold. And I was saying, hey, don't buy gold right now. Buy gold stocks, because they were so cheap, and they're still cheap. Not as cheap as they were then, but still very cheap. I wasn't telling people not to buy gold. I was telling people to buy gold in the ground before it's dug up, because when you invest in a gold mining stock, you're buying the gold that's just still in the ground. When you go to Schiff Gold, you're buying the gold that's already been mined and fabricated and made into a nice, pretty coin or a bar, right? And you're buying that. And what I was saying with that report is, you know what? Gold's over $3,000 an ounce, and look how cheap these mining stocks are. You got to buy these mining stocks right now. This is not the time to buy gold when these stocks are so cheap. And since I put out that report, the price of gold is only up by about 1%, but these gold stocks are up by more than 20%. Now, they were up quite a bit before I put out the report, but gold was going up a lot. And I thought it was ridiculous that gold made such a big move and the gold stocks were still so cheap. So now gold's kind of gone sideways for a few months, and the gold stocks have taken, the baton and run with it. And so I think this is, a marathon. I think we got a long way to go, but it's a very, very positive sign for the metals and silver too. I mean, silver has been demonstrating some relative strength. So I'm not telling people now, hey, don't buy any gold and silver. Everybody should still own some physical gold and silver. But I also think that more aggressive investors should buy these gold mining stocks because I think they're going to outperform now for many, many years. So if you really want to leverage up your portfolio, don't just own physical gold and silver. Have some of the miners. We manage a fund at Europe Pacific Asset Management, the Europe Pacific Gold Fund. EPGIX is the symbol, the no-load symbol. So you could buy that at any discount brokerage firm, or you can go to Europac.com, talk to the representatives over there. You can buy directly on our website. And silver, I think silver is getting ready to explode. We did get as high as 39.5, I think, while I was on vacation. So we've got a little bit of a psychological barrier up there, close to 40. But I think once we really clear $40 an ounce on silver, it's going to make a beeline for 50. And there probably will be rather, a little resistance around 50 because that's a massive double top going back to 1980 and 2011. But once we take that out, I think it's going to explode higher. And I think we'll be headed towards $100 an ounce in silver. Of course, gold's going to be 4,000 by then, but that still means you get a better bang for your buck in silver. So I think the entry point is perfect.
The global trade situation is constantly evolving, with the U.S. government's stance remaining the dominant factor. The U.S. government's proposal for reciprocal tariffs has intensified global trade tensions, causing risk aversion to rise and driving gold prices to continue increasing. Gold can soar in value during times of economic hardship, when fearful and uncertain investors seek safety. As noted, the 21st century has presented gold with numerous opportunities to shine. The turmoil that followed the September 11, 2001, terrorist attacks and continuing through the 2008 and 2009 economic meltdown was bullish for gold investors. It's not unusual to see gold's price rise in response to bad news, such as a global pandemic or a sovereign debt crisis, and drop with good news, such as better-than-expected economic growth. The question is, will investors recognize the setup before gold and silver make their next historic move, or will they only realize it after the window has closed? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.